Morning, everyone. Today we had the 14th episode. I'm your host, Elena, real estate broker of Union Real Estate here in Massachusetts. Today I had the pleasure to welcome back Martin Yao, sales manager and sales loan officer at CrossCountry Mortgage. Good morning, Martin.
Good morning, Elena. Thank you. Thank you for the invitation. And I'm happy to come to be back in your program.
Thank you so much. Well, before we begin, I want to dedicate a moment to thank all those who have served and is still serving this country. We want to wish you a happy Veterans Day. Thank you so much for your service. So today we're going to navigate a new topic with Martin Yao regarding the vacation home and how it differs from the investment property. So I know Martin has prepared a presentation for all of us. So please feel free to chime in with your questions and write it down on your Facebook message so we can address them as it comes. So Martin, take it away.
Thank you very much, Elena. And again, thank you very much for inviting me one more time in your program. And happy Veterans Day to all those people who serve our country. Happy Veterans Day. And also, Elena, a happy anniversary. I know that you are, like 4 days ago, I think you were celebrating the 4 years of Union Real Estate. No, congratulations for that. I'm sure that you did celebrate big, but obviously because of this pandemic situation, things have been a little bit different. No, but I'm looking forward to the next big celebration that you usually organize for those years of service that you have been providing to the real estate market. So congratulations and happy anniversary.
Oh, thank you so much. This year is different. So to keep everybody safe, I didn't have a big celebration, but we just cut a cake at home and share the news with all of you guys. And I really want to thank all my clients like yourself, Martin, all the referral partners and other professionals in the real estate field that has been supporting me all the way through. So I really want to thank you guys, my clients, you, Martin. Thank you so much.
No, you're very welcome, and happy anniversary again. And now let's start the conversation of this interesting topic regarding residential financing, which is as I said, very interesting and very current, because nowadays a lot of people, especially on the residential arena and investors too, are looking into buying second homes and investment properties. So I want to bring you some information of how we, from the lending side, view the financing of these two real estate properties. Especially now that we have the pandemic, a lot of people have been steering towards looking for buying second homes or vacation homes, because as you know, it's getting difficult to travel out of state or out of the country. So, and people have that need of having a vacation home, not to be able to unstress themselves, let's put it that way. And the tendency now is to get a vacation home, or purchase a vacation home that is very close distance to your primary residence, at least driving distance, because it's getting difficult because of the pandemic, or has been difficult because of the pandemic, to travel by air. And that is obviously boosting the residential real estate arena, and that is very hot, as you know, Elena. Lately has been very hot, and for not only those needs that different clients have, but also because the interest rates are historically low. We'll say historically very low. And also a lot of especially agents in the market, in investors, have been looking at the opportunities of purchasing investment properties that nowadays also is a hot item. due to the fact that not only because rates are low, but also because probably we have been observing that in the last months, prices have been also becoming very attractive to get these investment properties in with low financing. Now investors are seeing that as an opportunity to get more profits on purchases like that. So I wanted to bring you a presentation on how we banks and financing lenders look at the financing of those two products. So let me show you the presentation I brought especially for you, Elena. Okay, can you see it?
Yeah, thank you. I think this is a very relevant topic nowadays, especially like you mentioned. A lot of people are considering already purchasing their second home or a vacation home. So I'm very interested to hear what you got from us today.
Yes, Elena, thank you. Thank you again for bringing up this kind of interesting topics for the consumer and also for the public in general. I think it's great information that we bring to them, especially now that we have those tendencies that I was explaining a couple of minutes ago. No? So let's take a look. There's second homes and investment property programs. And let's start with the differentiation of those two kind of properties. So is the second vacation home the same as an investment property? Well, they both are financed in a different way. That's the main distinction. There's a differentiation in a vacation home and investment property that I'm going to explain in detail later. But the main difference of how to finance a vacation home versus how to finance an investment property is really the type of financing that you're going to get. Another second important difference is if there's a rental income needed to qualify for a mortgage, then definitely it's not a vacation home and it's an investment property. Okay. Owners, in a third distinction is that owners need to occupy the property for a portion of the year to make it a vacation home and not an investment property. In an investment property, the owner doesn't have to occupy the property. In other words, they shouldn't occupy the property to make it a vacation home. So let me explain you.
Can I have a question?
Yes.
So yeah, is there any specification on how long the owner needs to stay on this vacation home to be considered vacation home or second home?
A very good question, Elena. Usually on a vacation home, the owner needs to occupy that property for a portion of the year. Now, it's not a long or really a big condition that is needed. In reality, a vacation home or a second home is eligible if the owner can show that he's going to occupy for 2 weeks. So if they are going to occupy for 2 weeks during the year, that is already makes it eligible to be financed as a vacation or a second home. And also a distinction there, as I mentioned before, is that the owner doesn't have the need to qualify with a rental income involved, not to get a vacation home program to finance that property. That doesn't mean that the owner cannot rent that unit. They always can rent a vacation home during those portions of the year that they are not occupying. So that makes a vacation home very, very beneficial and very attractive. So I don't know if that answers your question.
Yeah, definitely. I think a lot of audience want to make sure, including myself, want to make sure that we understand how will be the qualification for the vacation home and second home. So I appreciate it.
Okay, perfect. So let's take a look of what is really a vacation home and I'm going to give you some history of how vacations home became or are becoming very attractive, and became very attractive also during the history of this type of properties because they have always existed. No? Really, a vacation home is the substitute of hotels and vacation rentals. No? As you see in the quote, hotels and vacations rentals were good alternatives as temporary vacation destinations before COVID, but not so much now because a lack of availability of safety, because of that lack of availability of safeness. And for longer and continuous vacation stays, they certainly were never considered good investment for visitors. In reality, a hotel and a vacation rental home is a temporary fix. If you really are looking into or purchasing a vacation home as an investment, that's the way you should always see it. No, definitely it becomes very beneficial if we analyze that on the financial side. And why? Because there's some main advantages that would definitely make buying a home, a second home or a vacation home very attractive. One is the great investment for its potential yield of return. And basically it's defined as appreciation. When you buy a vacation home, you own something, you own an asset, and that asset appreciates as we have seen the tendency along the years of being a homeowner or a property owner. So that you have that potential yield of return of appreciation. Then you have also the potential of additional income, which is the rental income that I was mentioning. For those for those days, months, weeks that you don't occupy that property, you can always rent it, and that's allowed. That's allowed and also common for people who are looking into into the benefits of having a second home or a vacation home being purchased by them. Another additional benefit is that you have 100% control of the property. Usually when you go into a hotel or you have a vacation rental property, that you temporarily rent it out for the season, unfortunately you don't have control of that property. First of all, you cannot do any modification because if not, you will be penalized. Secondly, you have a time period that you have to occupy it, and by any chance you want to change that time period, you're also penalized. And thirdly, you would never have the benefit of acquiring a rental on those kind of hotel, hotel or vacation rental units that you decide to, in this case, rent, because obviously that the ownership of those properties belong to the hotel owners or the vacation rental owners. You don't own it. So that makes it a little bit tricky, especially if you want certain flexibility in a stream of income. And fourthly, it's definitely cheaper to finance a vacation home than an investment property. Usually the interest rates are cheaper to finance a vacation home or a second home. They're slightly different than owning up on the financing that you will get on an owner-occupied property. And there's other beneficial requirements that financing a second home or vacation property allows you to have versus financing something as an investment property that we're going to analyze it later. Do you have any questions?
Yeah, so I'm curious to know if you can give us an example of how the interest rate differs from an investment property. How is it compared to?
Thank you for that question. I will say I will have to make my comment here. I'm not allowed by compliance to give rates, but what I can do, since you want to inform the clients, is to give you a range in difference in rates that you will have comparing a financing on a vacation property or a second home property versus an investment property. Usually the difference in rates are like half percent all the way to 1%, depending also on the qualification of the client, and the quality of the property itself, in the quality in the kind of property itself. Like you will see in later slides that, for example, if I finance or we on the financial arena finance a vacation home or a second home, unfortunately, we cannot finance a multifamily. It has to be only a home that possess one unit. In other words, could be a condo or can be a single family property. On the investment arena, you can finance condos, single families, and also multifamilies up to 4 units on the residential arena. No? After 4 units, it becomes a commercial property. But after up to a multifamily of 4 units can be financed through an investment property program. No, now in that makes it different too, because it's different a rate on financing a single family property than a multifamily property. Therefore, if you're financing a second home or a vacation home, which could be a condo or a single family property, it's going to be obviously cheaper than financing an investment property on a multifamily home, etc. No? So,
Okay.
no, that's a great question. But it's just to answer strictly your question, is between 0.5% to 1%
Okay,
difference
thank
in
you.
rate.
I had another question. You mentioned that as a second home, of course, there is a potential to get additional income for rental income. So say that I purchased this vacation single home, could I hire a professional management company to handle that rental income or taking care of the property?
Okay, very good question. If we're talking of investment properties, yes, you can hire a property management company to handle your rents, no, and that's a very common practice in the investment arena. But in terms of a second home or vacation home, unfortunately, Elena, you cannot have a management property managing that type of property or home. We go back to the third to the third advantage. You always need to show 100% control of the property. If you give it to a property manager or an administrator to manage or keep the management of that property, you lose control. In one very important aspect is to lose control on when you can occupy the property. The idea is that you keep that control of occupying the property whenever you want, and nobody will tell you when to do it. If you have a management company, obviously you lose part of that control because the management company could already engage a tenant on that property during the time you want to use it, and now you have to sacrifice your vacation and your entertainment just to cater that tenant, and that kind of becomes an investment property. So that's a very good distinction. You will see it in one of the future slides I'm going to show you.
Okay, well, I appreciate that clarification. I just want to make sure that we and also the audience understand the distinctions.
No, thank you. Very good questions. No, you're throwing me curveballs here. So, okay, so what makes a second home or vacation property eligible? What is the eligibility of this kind of properties? First of all, as I was mentioning, it has to be occupied by the owner on some portion of the year. And as you already asked me that question, usually you have to show that you're going to occupy that property at least 2 weeks during the year. So that's in reality, it's easy to prove that. Secondly, it only qualifies, the only properties that qualify as a second home or vacation property are one unit homes or properties that have 1 unit, which could be a condo on an apartment or maybe a townhouse or a single family. We cannot qualify multifamilies on this kind of programs. Thirdly, it has to be suitable year round for your use. That's where it kicks in the question in the response I gave you a couple of seconds ago, where you cannot give away or hire a property management company or an administrator to manage the control of your property, because now it doesn't become eligible to be financed as a second home or vacation property. Fourthly, it has to belong solely to the owners. When I say buyer, it could be different kind of buyers, maybe 3 people group together to purchase this property. It has to belong solely to them. They cannot transfer management or transfer control or ownership if those people, those other entities are not entitled. The fifth eligible point is that doesn't need to be rented full time, and it is not under a timeshare arrangement. Also, you cannot convert this, or a second home cannot be a timeshare, because remember, on a timeshare, you don't have control of the unit, or you don't have control of that property. No, it's basically managed by the owner, that sole owners of the timeshare, no management, no, and it's like if you had a homeowner association who is telling you what to do, you need to have full control of that. Okay, then, and as I said, obviously through a timeshare, you are not entitled to choose when you want to occupy the property whenever you want to do it, and that is important as a point of eligibility. No, the sixth point would be that it doesn't have to be operated, or doesn't have to be operated by a management firm, because you lose control of the occupancy, which we already know, explained it before. No, and another also very important point of eligibility, which is the seventh point, is that the second home must be reasonably distant from the buyer's primary residence. No, you cannot have or consider a second home, the house next door that you want to buy. No, because it's too close. That's going to raise red flags, and obviously the underwriter is going to start questioning why you're buying a second home next door if you have a lovely primary residence. So it has to make sense.
Okay, so when you say reasonable distance, is there like a perimeter of distance, or that is up to the discretion of the underwriter to define?
Also, very good question. I think that they responded with your second comment. It's underwriter's discretion, but there's always a rule in between that underwriters use as a common ground or as a base, which is the 10-mile rule. No, in reality, it has to exceed the 10 miles. Can be within the state. No, it's preferably better that if it's out of that same town or city, but they are going to apply probably the 10-mile rule plus other compensating factors. No, and that comes to my eighth eligibility tip, which is the property really must feel like a recreational residence. If you are fine, that's why, for example, multifamilies are not allowed, because nobody's going to feel recreating, in a vacation place if you are living with tenants that you are managing and you collect rents from them. No, and obviously, things like, for example, if the property is located in a residential area that is kind of resorty because has a lake, has beach, and things like that, that makes definitely a case to prove that that's eligible as a second home. So it needs to feel like it's a resorty area, and there's a reason why you are buying that second home, for recreational or vacational purposes. It could be, as I said, if it's that, if it usually applies on that 10-mile rule, that is underwriter discretion because it's not set in stone. For example, the 10-mile rule, it does apply when you are buying a second primary residence. And you already own a primary residence, you want to buy a second primary residence because maybe that primary residence is close to your job. Then there's a 10-mile rule that is applied. That primary residence has to be 10 miles away from your current primary residence. But in this case, they can use that as a point of reference. But the idea here is that it feels like a resort. It feels that there's a purpose why you're buying a second home or vacation property.
Okay, so then that prompts to my next question is how far or what's your coverage in the sense of, do you cover all the US for people that want to purchase a property, say that is away from Massachusetts, or can you also go globally?
Thank you for that question. And because the activities that I do, I think that you kind of have the answer. But yes, I can. We in CrossCountry Mortgage can finance properties nationwide, second home properties nationwide, And I also can finance vacation homes globally with different kind of programs. No, it wouldn't be the conventional loan programs that we have in the United States, because those conventional loan programs are basically managed by Fannie Mae and Freddie Mac, and Fannie Mae and Freddie Mac are not global lenders, but we have other kind of programs through other different kind of lenders, could be private lenders or non-QM lenders that would finance properties abroad, out of the United States, which I know we could discuss it with any of your audience that are watching this program today, or in in the repetitions if they are interested into. But thank you for asking that question. And as I say here, I can do it nationwide with no problem.
Okay,
I can finance your next house in Hawaii.
Oh,
Elena,
Hawaii.
if that's your, and also your next property in Mexico, if you are focusing that question to that.
Sure. So we are almost at the end of the program. Is there any other information that you want to share with the audience?
Yes, I'm going to quickly explain you the kind of financing that you're going to get from second homes, and also quickly explain you the kind of financing you get for investment properties. Okay, so for financing second homes or vacation properties, you have three options. One is the option of cashing out, doing a cash out refi from your primary residence. Secondly is obtaining a home equity line of credit or your current property too. That would not touch your first mortgage, but you will get a second mortgage on your primary residence. And thirdly, obtain a conventional loan on the second home itself. So let me explain you quickly. If you are going on the third route of applying for a conventional loan on this second vacation home, the great advantage of a second home is that it only requires at least 10% down, versus investment property that requires around 20 to 25% down. The credit scores that are required usually are a little bit higher than on a primary residence. Just to give you an idea, on a primary residence, it would start on a conventional loan from 620. On a second home, it will start from 640 credit score. On a conventional, on a second home, it requires reserves. If you are a wage earner or W2 earner, you would be required to show 2 months reserves, which is principal, interest, taxes, insurance, and homeowner association fees. Okay, and if you are self-employed, they will require you 6 months reserves. The interest rates charged on vacation homes are lower than investment properties. I told you already, between half percent to 1%, lower. Then you always have the potential to rent your second home or vacation home, but we as banks or lenders cannot use the rental income to qualify you. And you are allowed to obtain a gift fund from relatives, to be able to cover the down payment or the closing costs. What are the characteristics of investment properties that we did not tackle it before, but just to give a brief explanation to your audience? On investment property, we can finance everything from a condo all the way to a 4-family unit. After 4-family becomes a commercial loan, so it's not that wouldn't they wouldn't rely on a real residential financing. On the main characteristic of investment property, it does generate rental income, and it also appreciates. And the owner does not have to occupy the property. In reality, it's not allowed to occupy the property. It's only for business. And finally, the rental income can be used to qualify the person if they are looking for financing to be able to acquire this investment property. Very briefly, on conventional loans for investment properties, you'll need at least 20% down. And the reason why is because it's very difficult to get mortgage insurance. If you are financing more than 80%, the lenders are not going to be able to insure that financing. The credit scores are usually higher than on primary residences, but almost the same requirements on second homes. Usually it's between 640 to 660 that a lender requires to finance an investment property. It does require 6 months reserves, and it's reserves on the property you're acquiring as an investment, and also your primary residence. And that's for wage earners and self-employed people or customers. The interest rate charge is higher than on a second home property, which we already mentioned before. You have the potential, the potential rental income to be able to be used to qualify you to acquire this potential, this investment property. And unfortunately, in investment property, gift funds are not allowed. And once again, thank you very much for having me again in your program, Elena. I was missing it.
Martin, thank you so much for all this information. So one follow-up question that I have is that for the second home, is 10% okay as a down payment? And if there's any PMI, if doing the 10% down?
A very good question. On a conventional loan program, there's PMI, because there's always PMI if you request a financing over 80%. In 10% is the minimum requirement, but obviously they are going to assess the borrower and see if he's a strong borrower. They are going to obviously see that he has a credit score of more than 640 and that he can qualify with his own income, because unfortunately on investment, on second homes or vacation homes, you cannot use rental income to qualify.
All right. Okay. Well, thank you so much. It's already past the time. So we want to thank you for all your information, Martin. I want to thank the audience for participating and tuning in. We have people from Costa Rica, like Carmen Chon, who tuned in.
Wow.
And then some of our ARIA friends, Jacqueline Goose, Haley, Alan, who had tuned in. I'm sure a lot more. I see people popping in and out. So I really thank you so much for your support. So now we're gonna close this program, but if you wanna chat privately about more information, feel free to contact Martin Yao and myself. We're here to help you and connect you to the right professionals. Thank you so much.
Thank you. And happy Veterans Day, Elena.
Thanks.